The Very Good Food Company, Modern Meat, as well as Beyond Meat all have two things in common. First, they're all plant-based meat companies, and secondly, they all had wildly successful IPOs up to today's date. Plant-based meats have garnered a lot of attention from retail investors and institutional investors in the past couple of years. And that's because of all these social trends where people are going from eating meat, which is not exactly the best for the earth and as well as for our bodies, over to eating plant-based alternatives, which people see as a more healthier and sustainable route. But there are still folks out there who still swear by meat like myself right now, and that's mainly because of cost. I think that right now the cost of plant-based meats aren't really sustainable for the everyday consumer, but in the long run, they will probably come down in price and be comparable to our regular meats. And I think that there are a lot more health benefits from eating plant-based alternatives, but again, as I said, cost is the main factor right now. But the point of today's video is not to talk about plant-based meats and whether they're better than real meat or not. It's to talk about this new company that I found that allows investors like you and I to invest in earlier stage companies that might not yet be public. And if you guys are new here and this is your first time on the channel, my name is Daniel, and here on this channel we talk about stock market investing with a focus in growth stocks. So subscribe if you're interested in growth stocks that are Canadian based. The company that we're going to be talking about today is Eat Beyond. Their ticker symbol is EATS on the Canadian Stock Exchange. And Eat Beyond is an investment issuer with a focus on plant-based meat technology companies. So what an investment issuer is basically a company that goes out there and raises funds from either the public or private markets, and they take these funds and go out into the world looking for companies that fit their portfolio. So for Eat Beyond, they're looking for plant-based technology companies to invest in. And why we might put our money into Eat Beyond than rather investing in these companies ourselves is the fact that Eat Beyond can get access to companies that are not yet public yet. For example, they bought some shares in a company called Eat Just, which is not yet a public company based in San Francisco, which probably has a valuation somewhere around $1 billion to $2 billion based on how much capital they raised. And once Eat Just goes public, we can expect the initial investment that Eat Beyond made in Eat Just, that's a mouthful, that investment will have skyrocketed quite a bit, because if you look at IPOs like DoorDash or Airbnb, for DoorDash today they started at a price around $102 per share, and instantly when the company hit the markets, share prices popped to around $180 per share. So I expect the same thing to happen with Eat Just once they go public. When I was looking into this company Eat Beyond and figuring out why would I want to invest in plant-based technology companies, they gave a few macro trends. And the first and most obvious one is sustainability. Right now, the younger generation is seeing that sustainability is a more and more important thing with how they make their purchases in this world. Because the younger generation has the longest to live in this world right now. So if they're not taking care of this world, then they're going to be the ones that are suffering in this world down the road. People in the 50s, 60s, or 70s, they're out the door in the next couple of decades. And the fact that the younger generation is catching on to sustainability, this is a great trend for plant-based food companies because the younger generation has a lot more time or lifetime as a customer of plant-based products. Take a 20-year-old who's got at least another 40 to 60 years left in his or her life. That means 40 to 60 years purchasing plant-based products. Versus a 60-year-old, maybe they have another 20 years left in them, which is only 20 years of purchasing plant-based products. So this macro trend of having younger people who are looking for more sustainable ways of making their purchases is great for plant-based meat technology companies. The second trend that we have going for plant-based food technology companies is that normal meat right now does not have the best health effects. For example, red meat is known to cause some sort of cancer, as well as processed meats are not good for you at all. Processed meats undergo a lot of processes, and who knows really what happens in these processes. And a lot of the ingredients that are put in, I would call them mystery ingredients. And this long-term effects of these are studied by a lot of scientists and have proven to also cause different types of cancers or diseases later on in life. To add on to that, a lot of our meats have diseases in it. For example, beef products, they have mad cow disease. Poultry products, they have things like salmonella or avian flu, as well as our pig products have swine flu. So these are all risks that people take when they're eating actual meat versus plant-based meat, which is grown in a lab and a lot more controlled, does not yet have any diseases associated with them. Another macro trend is animal welfare. And I know that from my channel and talking about Canada Goose, for example, there's a lot of hate around animal cruelty, and I think that Canada Goose has done their job to rectify that a bit. But I know that a lot of people won't touch companies that have animal cruelty. And people will also invest in companies that are socially responsible with regards to animal welfare. So this company, Eat Beyond, is a socially responsible company, and they are an advocate for animal welfare because they're investing in companies that make meat out of plants instead of animals. So these social trends make a strong case for why investors might be looking to buy into Eat Beyond. And we can see that there have been a lot of investors these days who are looking to invest in this company. If you look in the past 5 days or so, the stock has popped from around 80 cents per share all the way up to $2.92 at the end of today. And the reason why I'll talk about later on, but first let's talk about the management team. So the management team is going to be very key when we're looking at this company because there's not much history into this company's operations, and a lot of their investments are actually quite new. Patrick Morrison is the CEO of this company, and on his resume, he has 15 years as a capital markets executive. And on the board of directors, they have one key person that I want to highlight here, which is Don Robertson. And he was the CEO of Mars Inc. from 1983 all the way up to 2006. And this company is a massive company. I think it's the 6th largest private company in the United States, selling about $33 billion of product a year. This company produces pet food as well as confectionery products, among other products out there. After his time at Mars, he was hired on as the CEO of Care Operations Limited, which is now called Recipes Unlimited. A lot of you probably don't know this company, but you know the brands that this company owns. Brands like Swiss Chalet, The Keg, Harvey's, as well as Milestones. Don Robinson is definitely going to be a huge driving force in the success of this company and how they make their investments. With his experience as the CEO of 2 companies in the food industry, this is going to be huge for Eat Beyond because of his understanding of the food industry as well as his deep connections into the food industry. Usually when a company goes out looking for funding, they look for funds not just for the money, but also for the management team. Because companies aren't just looking for money, they're looking for connections into the industry, as well as introductions to partners or customers. Now, the one thing with the management team that might be a bit of a red flag for us investors is that they only own about 0.8% of the company right now. However, they do have stock options in this company, which will amount to about 4% of the fully diluted amount of shares. Another thing is that management is not fully devoting their time to Eat Beyond because a lot of them also run different types of funds out there or are CEOs of other companies. So just keep that in mind as investors that the management team here also has other responsibilities outside of Eat Beyond. We'll do a quick segment on this company's balance sheet or just where their funds are allocated and how much funds they actually have and look at that versus their actual market cap. So today the company has about 19 million shares outstanding and the price per share is around $2.92, which puts them at a market cap of around $55 million. However, when we see here on their prospectus, look at the funds available. We can see that they have around $1.5 million in cash and the total available funds is $3.1 million. We can see that they have investments that are completed in October 2020 equal to around $800,000 and marketable securities at around $775,000. This company really is only valued at $3.1 million based on their cash and investments, but the market is valuing them at $55 million. So I would say they're a little bit overvalued right now. However, I think investors are buying in because this company can get into companies during their seed or Series A or Series B, which is not available to the public market. We can see all the different companies that they're invested in. They have around $306,000 worth in the Very Good Food Company, $200,000 in Just, $200,000 in Turtle Tree. They also made investments in Nabati, Sing Cell, Good Natured, and Greenspace. Now we're going to turn over to some of their portfolio companies. The first one I already talked about was Eat Just. And Eat Just, as I mentioned before, has raised $220 million, which probably puts them at a market cap of somewhere between $1 billion to $2 billion. And I think this company is probably going to be eyeing an IPO in the next couple of years based on their size. Eat Beyond has bought a stake in this company that's around $200,000, which is not exactly a large stake at all. based on the amount of funding that they've already raised. They bought about 8,000 shares of the Series F, and usually when a company raises that many rounds of financing, this means that they're ready to go public very soon. And what Eat Just does as a company is that they make plant-based alternatives for eggs. And they recently got the okay to sell in the Singapore market, which is ultimately what really boosted Eat Beyond's stock price in the past couple of days. You can see that Eat Just released their news on December 4th, and that was the start of the bull run for Eat Beyond. So if you're wondering why the stock went from around 81 cents per share all the way up to around $2.92, is because people realized that Eat Beyond made an investment in Eat Just, and Eat Just is a big deal in the plant-based alternative world. Another notable investment that Eat Beyond has made is in the Very Good Food Company. So they made this investment in the IPO of the Very Good Food Company. They bought about $50,000 worth of shares at 25 cents per share, meaning that they have 200,000 shares. And at today's prices of $9 per share, that investment now is worth $1.8 million. So Eat Beyond has turned $50,000 into $1.8 million. And that is another boost of confidence for people who are looking to buy into Eat Beyond, that management knew what they were doing when they were investing in the Very Good Butchers and had huge success there. So it's possible going forward in other companies that they invest in, they're also going to have a lot of success. And one last thing about the plant-based alternative sector right now is that this sector has a lot of different companies in it that are still not public. And what this means is the market is quite fragmented. And usually what happens in the beginning of a sector is that there's a lot of fragmentation in the market, meaning there's a lot of companies out there. However, consolidation happens. So this is when mergers and acquisitions happen between larger companies and smaller companies. So a lot of the companies that Eat Beyond might invest in the future during their Series A or Series B rounds could be acquired even before they go public. And that's how Eat Beyond will ultimately bring value to shareholders. Now I'm going to talk about some risks about this company. And the first thing is that management team is not fully devoted towards this company and they don't have a large stake in this company. So if this company does go down, management ultimately doesn't lose much because A, they haven't put that much money in themselves, and B, they don't own a large stake of this company. The second thing about this company that's a risk I see is that plant-based foods could end up being a fad. This is a very slim chance though, but it is possible that people will migrate away from plant-based foods to maybe some alternative out there. The third risk I see is that if plant-based food companies can't get their costs down, then the growth story is not going to continue as quickly as we think. Right now, groceries and foods are very cost sensitive and people aren't willing to pay big bucks just for healthier alternatives. There is a subsector out there that's willing to do so, but the large majority of consumers are still not there yet. The last risk that I'm going to present here is that a lot of the companies that they invest in could eventually go bust. I myself have a background in the startup world, and I did my own startup for a couple of years. And we went through one of the most wildly successful accelerators, Y Combinator. And just because we went through Y Combinator doesn't mean that we were successful, because ultimately we weren't. And I think that going forward for Eat Beyond, a lot of the companies that they invest in, maybe during the seed round, Series A or Series B, will end up going bust. Because that's just what happens with these early stage companies. These early stage companies, they sell you a dream based on the story, and funds out there have to buy into the story or the promises that these founders make without much material to go on except for maybe some MVP product that may or may not have some patents to protect it. So this is probably the strategy that Eat Beyond will have going forwards. And one thing to note when I watched this interview with the CEO is that they're mentioning that they will be raising capital from the markets. So expect a share issuing or share offering in the near future, especially because the stock price has risen so much. So that's my analysis of Eat Beyond. If you guys like this video or enjoyed this content, leave a like below, as well as subscribe and hit that notification bell if you guys are new to this channel here. If you want to learn more about the Very Good Butchers or the Very Good Food Company, click on these two videos up here. If you're there, I'll see you there. If not, keep up the grind and have a great day.